Welcome to the Capital News. I am your host, Alex Kreitis. Today is May 7th, 2019. Thank you so much for joining me. Hope everyone out there is doing well. Before we get started with the market news, I just want to send a shout out to my grandma. Happy birthday. Many more. Many, many more. Love you. Ladies and gentlemen, this woman does more by 8 o'clock than most people do in a week. How she does it, I don't know, but I'm very thankful that she does. We love you, Grandma. Many more. So what took place in the markets today? Well, this nonsense continued. What we were more or less expecting to take place in the U.S. equity markets yesterday actually unfolded today, because yesterday, despite the fact that markets were down in the early morning's futures trading, they were able to rally because there was still some hope that, yes, the Chinese trade delegation was coming to Washington, D.C. this week. So there were some hopes. There was some glimmer of hope that maybe, just maybe, a deal will be struck and the tariff man, of course I'm talking about President Donald J. Trump, will not actually increase tariffs. However, we hear from U.S. Trade Representative Robert Lighthizer that, well, it looks like almost regardless of what happens, unless there's some sort of 180, that there is going to be new tariffs placed on Chinese goods. So the markets didn't like it. They sold off once again globally, and let's get to that right now. So the S&P was down 48 points, representing 1.65%. The Dow Jones Industrial Average was down 473 points, or 1.8%. The Nasdaq was down 159 points, representing about 2 percentage points. And the Russell 2000, the small cap index, was down 33, which was a 2 percentage point decline. Now, of course, all of these market indexes were down even further. They were able to, I'm not even going to use the word rally, but they were able to come back slightly, very slightly during that last half hour of trading session. Again, all on the backs of tariff talks. Oil, WTI, $61.93. Brent, $70.28. So a little bit of movement, but nothing to write home about. Gold, we would have thought maybe today, because there was such a sell-off in the stock market, that maybe there was going to be a bigger flight to safety today in the precious metals markets, but that was not the case. There was just a little bit of movement in gold, now at $1,284 an ounce. Same thing in silver. It's still under $15, $14.95. The 10-year Treasury was down 2 percentage points, so a huge move to the downside on yields in Treasuries. Now sits at 2.448%. 2.448%. Just yesterday we were at 2.5. So there was a big move in the U.S. Treasury market, and there was obviously your flight to safety, I guess. People are trying to look to Uncle Sam as a safe haven bet. And sometimes, I mean, look, it doesn't happen all the time that if there's a rally in the bond market, it suppresses rates. Is cash maybe sitting on the sidelines or somewhere else? Is it going to end up rotating into the stock market to boost stocks? Well, that just didn't happen today because the headline news was just too devastating to the trade deal. The VIX, the volatility index, was up 25 percentage points, now sits at $19.32. Again, yesterday the VIX was on fire and was up 20% yesterday. The Nikkei, the Japanese markets right now, as we're doing this podcast, are down another 1.5 percentage points. The Hang Seng, the Hong Kong exchange, is down 0.5%. Meanwhile, the Shanghai, the Chinese composite, is only down slightly. Of course, there's still a handful of hours left to go. Anything could happen. But nevertheless, the information, the news, is still traveling around the world with a negative bias. I think if we try to read between the lines when it comes from U.S. Trade Representative Robert Lighthizer saying, hey, look, we're going to have some tariffs at the end of the week. Robert Lighthizer is sort of the chief negotiator in these U.S.-China trade talks on the U.S. side, obviously. He is more of a trade hawk. So he is not a dove, he is a hawk. He's not afraid to use tariffs. And I think this plays well into Donald Trump. I think he likes being called the tariff man. I think he calls himself that, right? He's the tariff man. He likes playing this character. So there's a couple ways that this can unfold. It's either there's going to be tariffs this Friday because both sides couldn't come to some sort of miraculous agreement where everybody is going to be in agreement. I just don't think that that's going to happen. I really want to take our side of this as the truth, not talking about the hyperbole, the exaggeration of remarkable and fantastic and the best deal ever. But when you have our trade representatives coming out and say, look, we thought we were getting close, and the Chinese want to renegotiate some things when it comes to sort of the enforcement mechanism behind some of the asks from the U.S. side that China must comply with, well, they want to go a roundabout way. They don't want to do it through law. They want to do it through some sort of administrative procedures, and we don't like that. Okay, well, then you sort of ask the question, well, what's the difference here when you're talking about whether it's through the legislature or whether it's just from, administrative decree? I mean, they're all communist at the end of the day. Well, I guess style or form must play a role in it. I mean, is it really a big difference? It must be, at least according to our trade representatives here, that this is causing a stir. So it's still on that the Chinese trade delegation is set to come to Washington, D.C. I really don't expect much to be accomplished. I mean, maybe they'll get back to where we were a couple weeks ago when we were told everything is, going swimmingly well. And then, maybe the tariffs won't go up. But I don't think that's going to be the case. I think the only way that the tariffs are not going to go up is if a deal is actually made and that it's concluded. I mean, you're just going to say, all right, it's done. We're going to have a signing ceremony between President Trump and President Xi, and that's it. I don't think that's going to happen. So now the president, because he come out and tweeted that he's going to increase tariffs, he has to do it. Otherwise, he's going to look extremely weak. That it's going to look like he's being played by the Chinese. He can't afford to look weak right now at all. So the other thing that could be the case, this is speculation, is perhaps there's already a deal. And this is just the president coming out and trying to sort of, look like the strong guy in all of this, the muscle man. And, oh, yeah, see, I told you, it was just the art of the deal. I just had to do this. I just had to threaten him a little bit, and everything was fine. Meanwhile, really, behind the scenes, everything was fine and dandy. I don't think that's the case here, but it's a possibility. Again, that was speculation. What I think is going to happen is I think we're going to have tariffs put on. I really do. How much more are the markets going to sell off? Your guess is as good as mine, but they'll probably sell off a little bit further. Maybe significantly, because there's going to be downstream effects, because it's not just the fact that it's the trade dollars, which at the end of the day doesn't amount to a whole lot. When you're talking about two economies combined, their GDPs are over $30 trillion. Not to poo-poo it and say it's small, it's small potatoes. It isn't. It is a lot of money. But in the grand scheme of things, it has more to do with just trade. It has a lot to do with psychology. Well, what are businesses going to do? Well, there's more tariffs, so everybody's going to have to reprice. That's going to cause another tizzy. I mean, a lot of businesses, they were just getting over the last round of tariffs. They've adjusted. Consumers perhaps have adjusted. Supply chains have somewhat adjusted. Now is everything going to be thrown into another, into the land of flux? Is that where we're going to be? I mean, what's going to happen? It's anybody's guess. That's the problem, though. This uncertainty, the level of uncertainty. Markets do not like uncertainty. We were told for the past several months, again, that these talks were going swimmingly well, that it's going to be historic, it's going to be remarkable, it's going to be fantastic. Now you got Tariff Man out over the weekend saying things are moving too slowly, and I'm going to raise tariffs. No. How do you like that one? You can't play these games. This is the big problem. When you do all this stuff publicly, when you go to Twitter and you move markets to the downside, I mean, today, just on the U.S. side, it was 2%. You got 1.5%, an additional 1.5% to the downside in the Japanese markets. The Shanghai Composite was 5% to the downside yesterday. I mean, this has huge effects. It's not good stuff, people. It's not a market when this happens. I mean, one of the only headlines that should come out any time that has to deal with this type of devastation should be war. And if that came out of nowhere. But that's really the only type of headline that would come out from the mouth of one or two people that could move markets to the degree that the president moves them on tweets of trade, when you have central banks come out and make statements as to what they're going to do with quantitative easing, quantitative tightening, interest rate policy, whatever, or some other rabbit they're trying to pull out of the hat. I mean, it's all bogus. It's not a healthy market. But I honestly think that tariffs are going to be increased come Friday. I really do. And we're going to get into that a little bit more here because we had a conversation yesterday, and I know yesterday was filled with a bunch of headline news because there was just so much to talk about, and we really couldn't dive in much to any one single thing. I mean, we did our best to really, try to talk about the tariff situation, and that's going to continue. I mean, we said that here yesterday, that it's going to continue throughout this week. That is going to be the biggest driver of markets. It was yesterday, it was today, and it's likely to continue throughout this week, and quite possibly, again, if tariffs are placed on additional Chinese goods, then you're going to see a sell-off on Friday. You're going to see, and if that's the case, you'll see a sell-off continue next week. Now, if by chance a deal is agreed to, and President Trump and President Xi can quickly come to a signing ceremony and finalize everything, then you're going to see the markets take off. It's going to be a complete reversal of what we've seen over the past 2 days. I don't think that's going to happen, but it is a possibility. Now, yesterday we were talking about the Committee on the Present Danger, a conference that I was watching on YouTube, and there were some notable speakers. There's about a half dozen gentlemen who were up there who were giving either a speech, a little lecture, a little presentation. Some of the notable ones were Gordon Chang, just to refresh everybody's memory. Gordon Chang, journalist, author, big skeptic of the Chinese economic miracle. We have Kyle Bass, hedge fund manager. His claim to fame was short selling the subprime crisis back in 08-09. And Steve Bannon, a former advisor to President Trump. Now, there was some interesting presentations in and of themselves, and then there was an interesting Q&A session following their presentation. One of the gentlemen in the crowd, and I mentioned him yesterday, one of the wealthiest men in the world, John Katsimatidis, asked a very simple, yet I think profound question. He was basically asking them, what is Wall Street doing? What is their allegiance to the United States of America? And I think, again, that was a profound question. And a couple of the guys, particularly Kyle Bass and Steve Bannon, they kind of looked at each other and sort of, laughed a little bit because they're really starting to get to the truth of the matter with that question. They don't care, folks. That's the whole point. There is no sense of patriotism or nationalism when it comes to these corporations. One of the things that Steve Bannon said, it was either during his talk or he reiterated it during the Q&A session, was regarding the fact in his mind, and there's probably a lot of truth in this too, that corporate America is the public relations arm of China, Inc., and Wall Street is the investors' relations for China, Inc. It's probably true. Corporate America, Wall Street. Public Relations Department, Investors Relations Department, all for China, doing the bidding for China. And that's, we've had those conversations here over the past few months regarding this. Everybody thinks that China, they cracked the code. They can't fail. You just needed the right blend of communism, a little bit of dose of capitalism, and boom, that's it, presto. 1.4 billion people, you can't fail. That's a load of bull. They surely can fail. They surely will. The question is just a matter of when and to what degree, which is always the question that remains, because nobody can time it perfectly and nobody knows the extent to how something is going to unwind. All I do know is if tariffs do go up on Chinese goods, it will have a negative effect on the Chinese markets, more so than it will the U.S., because we are not a huge exporting nation, but China is. Now, they're transforming their economy, no doubt about it, to become one that's more internally driven, based off of investment, based off of consumption, as their middle class grows. but they still depend highly on exports. And so if the president does increase tariffs, it will have a negative effect, which could be, again, he's playing a big game here. This is on the grand scheme here. This is on the grand scale. He knows this. The president and his team knows this, that it will negatively affect the Chinese more than it will the U.S. economy. Now, given the interconnectedness of everything, that's up for debate. We're not going to go off on a tangent. But nevertheless, it will negatively affect the Chinese economy more so than it will the U.S. I happen to agree with that. Of course, could be wrong, but I happen to agree with that. So that's also in agreement with what a lot of these guys at the Committee on the Present Danger speech and presentation were saying. They were telling the president, don't do it. Don't make a deal right now. You're in a position of strength. Do not do it. We have some good economic numbers out there, headline numbers. Of course, we go through them. We know they're not that good, but nevertheless, that's the headline. So put those headline numbers out there. Everything is okay. You have the Chinese right where you want them. It will hurt them more than it will hurt us if you increase tariffs. Increase the tariffs. Do not make a deal. This was a week and a half ago, this presentation. And then over the weekend, you had President Trump come out and say, yeah, things are moving too slowly. I don't like it. We're going to increase tariffs. Again, this is not a coincidence. This is not a coincidence. Things of this nature, this grand of a scale, there's no coincidence. Especially when one of the guys presenting was a former advisor to the president. This is the hard stance he takes. The other thing I appreciated hearing during this conference was something that we've been discussing here for the past couple months as well. That this whole trade, this quote-unquote trade negotiation, has very little to do with trade at the end of the day. Again, you just look at the numbers. The scale of it just isn't there. It just isn't there. A $30 trillion economy when you're combining the U.S. and China, and you're talking about, 10% on $200 billion. It's nothing. It's nothing at the end of the day. It's a couple fleas on a big dog. It's nothing. Is it an annoyance? Are you going to feel it here and there? Yeah. But it's not the dog. It's not the meat and potatoes. So I kind of felt vindicated on that one because we've been talking about that because you don't hear that much anywhere else. You turn on Bloomberg, CNBC, everybody's complaining. Oh my goodness, 10% on $200 billion. Supply chains, everything's going crazy. This is why there's so much pandemonium. We can't stand it. No. Take a deep breath. Really observe what's going on here. What's really going on here isn't just the trade stuff. Again, that's fleas on a tick or on a dog. That's nothing. What they're really trying to do, the U.S., Team Trump, is to slow down the economic machine of China. They're trying to say, oh, you know what? We're a superpower. We've been a superpower for quite a while. We like being a superpower. You're not just going to come up here and throw your weight all around the world and think you're going to get away with it willy-nilly. Now, you've been getting away with it for the past 20 years with the Clintons and the Bushes and the Obamas, but now a new sheriff's in town, and I don't like the way you're playing ball. I don't like the fact that you're taking IP. I don't like the fact that there are forced technology transfers. I don't like the cyber warfare that's going on. Oh, and a whole host of other issues. And there's no way the Chinese are just going to cave and say, well, you know what, you're right, you finally got us. We're just going to stop now. It's not going to happen. That's really at the heart of all of this as to why there's not a trade deal done. Because both sides know it. The Americans know that the Chinese have gotten away with murder for the past 20 years. And now the Chinese know that this administration knows that they've gotten away with it for 20 years. And they're not just going to say, well, you caught us red-handed. We're going to, all right, we're going to be done with this game. It's not going to happen. It's not going to happen because China has a whole host of domestic issues. They have 1.4 billion people. You cannot just turn off the faucet that they've been drinking from for the past 20 years. It's just not going to happen because the amount of civil strife that will cause, that's ultimately what the Chinese people or the Chinese government are concerned with, is that there's a civil war or a major uprising. And there could be, because a lot of the numbers that come out of the communist government are not to be trusted, just like they're not to be trusted from the U.S. of A. You got to dig deeper. Sometimes you got to use proxies. I mean, you don't necessarily have to use proxies or other country data to understand what's going on in the United States, but in China, Yeah, you have to look at some of their neighboring countries, who they really trade with, and then to see if it's painting the same rosy picture. Because if it isn't, then you can say, well, something's amiss here. And, well, when you look at those numbers, something's amiss here. And don't worry, we will get into that some point in the future. We will be looking at a lot of Chinese, their trading partners. How are they looking relative to China? Is everything making sense? No, it's not making sense. Long story short, but we'll get into those details as we progress, because this is going to continue to be front and center. This is a political story. This is an economic story. This is a geopolitical story. This will take center stage in 2020. Now, how much time and space it takes up in the 2020 campaign is going to be anybody's guess, because there are so many unknowns. There are so many wild cards. There are so many trump cards out there. We just don't know what's going to happen. But no doubt about it, it will be a major talking point for this president and his administration, one way or the other. He will walk away from this, and if the market sells off, well, guess what? He has another target to blame. He says, look, I'm not going to sign a deal if it's a bad deal for the American people. I'm looking out for you. This is what you put me in here for. This is exactly what I'm going to do. You can read my book, The Art of the Deal. There's nothing wrong with walking away. I'm going for the best deal. The best. Period. End of story. We didn't get what we wanted. We walk away. It's the Chinese fault. And that's what he's going to do. So if the market sells off, he's going to have the Federal Reserve to blame. He's going to have the Democrats to blame with all of their investigations. He's going to have the Chinese to blame. And of course, the president's going to skate. And he's going to say, look, I wanted to do this, that, and the other. I told the Federal Reserve to do this, that, and the other. I told the Democrats, let's get together and get some things done. Don't investigate me. It's in the State of the Union. I told you all these things. Nobody wants to listen. And now the markets are selling off. And what's going to happen with the economy? Maybe that goes down too. But guess what? It's not my fault, because I came in here. I did the tax cuts. I did the deregulation. GDP was at 3.2% in the first quarter. Nobody was expecting it. Jobs report numbers were at 3.6%. 50, 49-year lows. I mean, I did everything I was supposed to do. I told everybody else to get off my back. He set this up. I told you the guy was going to dance. He is. And he's a pretty good dancer. And I told you he would be. But getting back before we sign off here, with the Committee on Present Danger, I think, ideologically speaking, John Catsimatidis asked a very important question. What is the role of corporate America? What is the rule of Wall Street? Is it just profits at any and all cost? Because that is how they operate. Or is there supposed to be some sort of combination where, yes, you look out for your shareholders, you look out for your stakeholders, but at the same time, you have to understand that some of those stakeholders are the people of the country in which you were formed. In this case, the United States of America. It's where you're domiciled. It's where you are protected by law. It's where you will go running to in the event something bad happens. Legally, you're going to go to American law enforcement. You're going to go to American politicians. You're going to go to U.S. courts. And if you're going to take advantage of all that stuff, well, then maybe somewhere, not in the back of your mind, but in the very front of your mind, you have to have some sort of sense of patriotism and nationalism. And you have to say, you know what? I'm not going to allow the Chinese, or any other country for that matter, to simply take our intellectual property from us, or to force us to give up our technology and the way in which we do things, our process, our systems. We're not going to do it. But they did. And they did it for profits, and they did it for money. And in this whole scenario, over the past 20 years, people have lost their jobs. You had states who were extremely vibrant in manufacturing. Pennsylvania, West Virginia, Ohio, Wisconsin, Michigan. The Rust Belt now, where the opioid crisis is alive and well. Lost their jobs. That's why Donald J. Trump became the President of the United States of America. This is all tied together. This is why you guys have to pay attention to this stuff. This is why you have to ask these types of questions. Because if you live in a country where it's corporate interests, and we're talking about corporations with trillion-dollar market caps, when they have a bigger allegiance simply to profit than they do to country, this is what will happen. Jobs will be displaced. Laws will be changed to protect them and to negatively affect the average American, because it's not about any type of nationalism protecting the American worker. You're simply looking at people as a resource. Look at what it's called in corporate America, human resources. You're not a human being, you're a human resource. That's how corporate America looks at you. That's it. It's unfortunate. Everything is about dollars and cents. And when this, it's very disappointing because so many people are affected negatively by this. And that's why this was such a simple question, but very profound to kick off the Q&A session with this conference. What is the role of Wall Street in corporate America? They don't care, folks. They didn't care up into the lead up of 08-09. They either knew they were going to be bailed out, or they were wagering with a lot of certainty that, they're going to be bailed out. You didn't get bailed out. You're not going to get bailed out next time either. I don't even know if they're going to get bailed out next time, because I don't know where the money's going to come from, unless they simply print it all again. But I think at that time, there's going to be such an awakening, because this happened 10 years ago. It's not like it happened 80 years ago, and there's only so many people alive that remember it. This was a decade ago, if it happens within the next couple of years. It's not going to be good. But that was a very profound question, and it's something we're going to focus on in the future when we have a little bit more time to do so, when the news isn't so headline-driven and it's all around the world where you're having this type of negative sell-off in what's going on. So that's why we tell you, have a plan, be prepared, be diversified, build some cash. The sell of a lifetime will happen. It's going to happen in a couple years, if not sooner. It's there for the taking. Everything is coming together, but we live in the financial world of Oz, which is, again, the reason why you need to be diversified, the reason you need to be prepared. Have cash on the sidelines, because stocks aren't going to buy your groceries. So make sure you got a nice little savings going there, too, if you can. I know it's difficult. 78% of Americans live in paycheck to paycheck. It's easier said than done, but nevertheless, do your best to do it. Live within your means, and we will keep you posted. Thank you so much for joining me today, ladies and gentlemen. It's been a pleasure having you. As always, please like, share, subscribe, get the word out. It's going to be an interesting week. This is the Capital News. I am Alex Kreitis. Godspeed.